Hi there, I'm Toni Taylor, the president of Interconnect Mortgage, and I wanted to talk to you about when is the right time to start the pre-approval process. So if you're going to write a contract immediately, it's already, you already should have done it. So right now, if you haven't already done it, you got to stop. Don't even watch anything more in this video. Just go ahead and pick up the phone and give us a call, 561-373-0371, and we will jump all over this for you. If you are not ready to buy for 3, 6, 12 months, it's still time to call. Maybe not with the same sense of urgency, but still time to call nonetheless. So the truth is, it's never too soon to start the planning process. And there are 3 things that are looked at when you're doing a pre-approval process or getting qualified for a loan. And I think it's helpful to have a little bit of understanding about how these things can impact you and how planning in advance can help you optimize these things. And so the first one I'm going to talk about is going to be your credit report. And, look, if you're 3, 6, 12 months out, we can actually do what they call a soft inquiry, which means it's not going to show up as a inquiry on your credit file. It's not going to be a permanent, indication that somebody looked at your credit. And what that will do for us, though, is it will give us your credit scores, and it's going to tell us what all your liabilities are, and it's going to let us know if there's anything there that's adverse that we need to be working with. So, and look, I don't want you guys, do not qualify yourself without the help of our team on this, okay? So I will talk to people that will think, well, I had a bankruptcy or a foreclosure, I had a repossession, I'm never going to be able to buy a house. Just not true. We have a lot of programs as a brokerage company. We have a lot of guidelines and a lot of programs that are very forgiving. Life happens. So don't beat yourself up. And don't self-diagnose. It'd be no different than, we all go on WebMD. I know I'm probably as guilty of it as anybody. And, I'm never right. It's never, that little mole is not always cancer. And so I'm just better off staying off of the internet. And the same thing kind of goes in this situation. There's a lot of information out there. And it's not to say the information is false, but it may not be relevant to you in your specific situation. So having an expert in your corner evaluate and let us tell you, what the diagnosis is. And a lot of times we will look at a credit and we can figure out that there's, maybe your credit score came in at a level that you're still qualified, but if we could get it to a higher threshold, maybe it would improve your available terms that are out there. So your credit score is an important component in that. It can affect the programs that you can get into. Some programs have lower thresholds for credit score than others. There's overlap in some areas, but understanding, and if there is something that we can see in your credit that, hey, if you are able to take this credit card that's maxed out, for example, and get that balance down, that's going to improve your credit score. Sometimes we have people that just don't have enough credit, and we need to help you work on getting some credit history. And, a lot of times what I'll recommend in a situation like that is go get a secured credit card and go to your bank and do that. And then really, really important, do not go out and max it out. One of the key pieces of credit is what's my limit and what's my balance. And the closer those two are together, it can actually have a negative effect on your credit. So something we've seen, especially over the last couple of years, a lot of people working virtually, which I love. I mean, we have a lot of people here that work virtually. I think it's fantastic. I think it helps people with their quality of life and managing that work-life balance that we're all trying to get our hands on. And I think it's great. But we've got to understand whether that's feasible for you. If you're relocating, are you in a job that's going to allow you to work remote and it doesn't matter where you're at? Or are you planning on getting a new job? And what are the rules around that? There are some programs that you can qualify for that, as long as you have an offer letter in your hand, you can actually close on the house. So you can imagine with all these different variables, and the rules are different for every program, it's really important to look at these things up front so that we can plan accordingly. And sometimes it's a matter of, hey, let's do this analysis and preparation and then make sure we handle our tax returns accordingly so that we get our documents filed on time. Sometimes they're going to be necessary in order to get the mortgage done. So again, you want to have an expert in your corner that can help guide you and be very specific to your situation. The third thing that's going to come into play is going to be the assets. And, there are programs that require no down payment, but even when you have no down payment, you're typically going to have some closing cost. So getting a clear picture, and I promise you this, we are like going to the doctor's office. We are not we just want to help you get a mortgage. If your goal is to own a home, our goal is to help make that happen for you. So I don't care if you're sitting on $1 billion or if you've got $20 in your account. We're happy to talk to you, and we're happy to help you understand what the options are. Now, sometimes programs allow gift funds. And, it's not uncommon that people have family members or other people in their life that are willing to help them out with those assets. There's other assets that you may have that you think, okay, well, I don't really need to talk about my 401k because I'm not using my 401k. Well, some programs have reserve requirements. And even though you're not using your 401k, having the information about that can make a difference. So, when we compile all these details for you, what we're going to have the ability to do is help you get a clear understanding of, based on what I'm qualifying for, what am I going to be looking at as a monthly payment? And you're going to get a range, right? Because you're not on a property, you haven't identified a property yet. You're not locking in that interest rate until we identify a property. And then also, how much money am I going to need? So if I don't have the money today, how much do I have to try to put away? How long is it going to take me to get that amount of money put away? So you can imagine there's a lot of different things here, but all of it's very manageable. As long as we can be proactive, you will find that it's a lot less stressful. So please don't self-diagnose or don't self-approve or don't self-deny. Many people, especially with the self-employed people, talking about the income again for just a second, they may take in a lot of income, but that gross revenue is not how we have to use. That's not the formula that we use for qualifying when it comes time to get the mortgage. So looking at those documents and verifying the information, and it's really, I almost hate to use the word verify because I believe you, but it's more so analyzing the paperwork so that the numbers that you gave us are in line with the numbers that the underwriters are going to require us to utilize. So, again, whether you want to go write an offer this weekend or whether you're 3, 6, 12 months out, now is the time to start that pre-approval process. And, the other thing I want to, make you aware of, give you some food for thought on this topic and when to have these conversations. If you're going to go look at a home and you haven't done this pre-approval process, if you like that home and that home is priced right, there is a good chance somebody else is going to look at that home and they're going to like it as well, and they're going to want to make an offer. And, put yourself in the seller's position for just a minute. If you had 2 identical offers come in, same type of financing, same down payment, same closing date, everything is identical, and one client that was making an offer had been pre-approved and one had not, which one do you think that seller is going to take? So, obviously they don't want to take their home off the market for somebody that hasn't done the due diligence and they're not sure is going to actually be able to get into the mortgage that's going to be necessary to make the transaction complete. They've got their own moving parts, right? So what you will find is by doing this pre-approval, it actually will help you, and it will help empower you and your team, your agent, negotiate the best property on the right house for you. And I don't want to see you miss out. So it's really important to get this stuff done. And here's the other thing I like about it, right? Paperwork's, for most people, paperwork's not really your idea of a good time. There's a few of us freaks out there like myself that don't mind it. But the truth is, the fun part is going to look at the house, going to look at homes and envisioning and looking at neighborhoods and doing these things. And by getting this piece of it off the plate, you can go enjoy that. You can take a lot of the stress out of it and actually focus on that piece of it without the additional pressure of the minute you go into contract, now you've got to scramble to compile everything. So I would highly encourage, like I said, just get it done. No big deal. We're here to help. Give us a call at 561-373-0371, or you can hit a link below and you can actually go into a calendar and schedule a time and a location, a time and a phone call that's going to work most conveniently for you. But let's get that pre-approval done, because I want this to be a fun experience for you, and I want you to optimize your options in terms of the financing programs that are available. Again, Toni Taylor with Interconnect Mortgage. Appreciate you. We look forward to helping. Thanks.